Well guys, unfortunately, I have to be honest with you and tell you that a crash is coming and it's gonna be here by March 31st. I know it's a popular refrain we hear all the time, but what if it is true this time? And more importantly, how the heck do you prepare for an event like this? What can you do as an investor to avoid this pending doom? So let's explore that today. I mean, the narratives, what you can do about it, what happens if any of those guys are actually right. And I'm not going to give you any BS, no theoretical garbage, nothing like that. We're just going to discuss actual facts behind it and what you can do to prepare. I just ask in exchange for you to gently tap that like button and consider subscribing too if you like the truth without the hype. And it still says like 65% of you guys that watch all of my videos actually still are not subscribed. So make sure you click that subscribe button and hit the little notifications bell too. Otherwise, YouTube won't show you my videos because I don't know, YouTube still can't figure that out. So 2022 is basically the perfect year to kind of go back and review what all these experts and what everybody else was telling you was going to happen, you know, basically back then through the rest of the year there in 2022. So we started off the beginning of the year coming off those ridiculous highs at the end of 2021, with all the experts basically saying 2022 is going to be an even better year than it was last year. Just keep buying, basically, keep buying despite the fact Tesla was just coming off the, $400 all-time highs. It dipped down just a little bit there. And this was a perfect buy the dip opportunity to scoop up that Tesla before it goes to the moon again. And that was kind of the narrative around the stock market in general, despite the fact that the Fed had told us late in 2021, hey guys, we're going to start raising the rates here. They didn't give us their specific plan until January, but they basically said, hey, we're going to start raising the rates. And, hey, basically we're seeing some data that we don't like, but everybody just ignore that. 2022 is going to be great. Keep buying despite the fact that most of the stocks out there were still significantly overvalued. That was everyone, guys. That was the media. That was most of YouTube. That was basically everyone out there telling you to do that. And then when the Fed actually started raising the rate and some things started happening, everybody completely flipped, and now it's going to be the worst thing ever, and doom and gloom and all that other stuff just basically started piling in after the fact they'd already had you buying the previous 3 months at ridiculous highs. Now all of a sudden everybody's flipping the other direction. And then we had the Russia-Ukraine thing kind of kick off, and then it got even worse. I mean, honestly, basically oil spiked up, and when it hit that high that it was at, the narrative was, oil's going to $200 per barrel. You just wait. It's coming. This is unstoppable. It's going to do this to the economy. It's going to destroy this and blah, 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 blah. Now, looking at the chart right here, you guys tell me what happened from the moment that it hit that spike and all the $200, $180 oil calls came in. Right there, what do you know? They told you, they made that call right at the top, and here we are. I don't think we're anywhere close to $200. Now, could it spike up again? I guess so. I don't know. I'm not an oil expert. I don't trade oil commodities or anything. But that narrative was driven by what exactly? I mean, a bunch of pretty charts and graphs and all these other things that show you exactly where the market's going all the time. I'm not exactly sure where all that sort of stuff going, but I can deal with reality. And all the experts and all the geniuses and everybody else were saying, that's where oil is going, and of course it did the exact opposite. Then when we hit those June lows, guys like Michael Berry and other professionals like that telling you it was going down to 1,600 and numbers like that, basically over the course of the next year. You just wait, this is nothing. Yeah, we're at those June lows, we're at those new bottoms. However, that was nothing. You just wait, and they threw up all these pretty charts and graphs and all these other little things that justified what they were doing. However, is that what happened? No, actually we rallied. Yes, we did make new lows in October, but look at those lows in October. Are they anywhere near, down to 3,200 or down to 1,600 like some of the extreme bears were pushing and a lot of folks were believing? The answer is absolutely not. No matter how many charts, no matter how many graphs, no matter how many, this always happens, this has happened the first 70 years in the stock market, every time this flashes, this happens, and all these other things like that proved that their thesis was absolutely correct and going to happen, it didn't actually happen. And unfortunately, our beloved Tesla was not immune from all this ridiculousness and all this craziness, guys. I mean, look at the end of last year. What happened to it? Yeah, it got obliterated down to, that 140 range, whatever the heck that magical number was. It got obliterated down there, not for the reasons that they said it was going to go down there, but because of the whole Twitter thing and the pressure from selling Twitter and all these other things like that, which I'm sure everybody had on their radar as to why Tesla was going to fall. Nobody had that on their radar. Doesn't matter. The point is we got down to that levels, and what was the narrative? It wasn't buy, 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 buy. Not the NSYNC song or Backstreet Boys, whatever. I realized when I said that, that's exactly what popped in my head. Anyways, guys, sorry about that. The point is, when it fell down to those ridiculous lows of 120, 103, whatever the heck the number was, all the experts, all the pros, everybody was out there saying, oh, don't buy now. You're an idiot to buy now. Tesla's going to go down to 80 or 60, or in some cases even 40. And guess what, guys? It wasn't Gordon Johnson saying this. He was not out there cheerleading this narrative. It was actually the Tesla bulls who were out there, basically pushing this narrative out there as to what was going to happen with Tesla. Many of those same folks who would call people like you and I, if you weren't buying Tesla at 300, 350, 400, complete idiots, we're now saying you're a complete idiot for buying Tesla at 120, 103, 10 whatever, because it's got to go lower. This is what's going to happen. And again, guys, these are bulls saying this. Basically, once again, these charts guarantee that's where Tesla's going. And, Elon being Elon, and, there's demand problems and all this other ridiculous stuff that wasn't true at all. And once again, that narrative was completely false. And unfortunately, none of those charts or graphs or anything else predicted anything. And unfortunately, many of those folks and their followers actually sold at those low levels because it was just going to go lower and you could buy lower back into the stock. And as a long-term investor, I'm kind of looking at that whole time frame because I tend to view things in years, not in terms of months or days or weeks or whatever the case is. But when I kind of look at over the year, they basically executed a buy high, sell low strategy. And that, honestly, we all know that's the worst strategy ever. However, that's exactly what happened. They were buying at 300, 350, 400, and then they were selling at, 150, 120, 140, 103, whatever the heck the number was. That's exactly what they executed to, and that is very, very dangerous, and that's why these narratives sometimes can be so dangerous. And honestly, I feel bad. I feel bad for the followers. I feel bad for the creators because I know that's not necessarily what they wanted to do, or that was not their strategy coming into, basically the past year or so, or year and a half, however, the time frame is that you want to kind of build into that. That couldn't have been their strategy during that. There's a lot of smart folks that fell into that. Why does that happen exactly? How does that happen to some folks where that's not their intent? Nobody intends to buy high, sell low, but that's what ends up happening. During a normal market, during normal times, or even 2 years ago, buying at all-time highs and selling at lows was something that everybody would laugh at and go, who the heck would do that? Honestly, it's laughable until, actually the stuff hits the fan like it did last year. And then all of a sudden it's not so laughable anymore. People are actually executing that strategy. So that tells me right there that it didn't have anything to do with the actual strategy. Those were all emotionally driven decisions. The decision to buy at all-time highs when a stock's on a run and it's way above fair valuation, any valuation metric you want to put on it, is an emotional decision because you're feeling that FOMO. You're feeling like it's going to make that next leg up to 500, to 600, whatever the case is. And same thing whenever it's falling down low, you just feel like, gosh, if I just would have sold at 400, I would have been okay. But now it's down to 200 or 180 or 100, and gosh, it's just going to keep going. And it's going to go down to 80. Those are all emotional reactions because you're not seeing the opportunity that is just, basically screaming at you and such. Emotions have completely taken over the investing and created a scenario to where that happens. That's the only way that happens in the end because nobody sets out to do that in the first place. But all of this can be avoided, and for every disaster for one person, it's an incredible opportunity for somebody else. Now, before we get into that and I give you the specifics on that, I got to be upfront. I have no idea if we've hit the bottom or not. I have no idea if there's another huge lick down coming or not. I have no idea if we've already bottomed and we're in the start of the next bull run. I have no idea about any of that sort of stuff. It's not about guessing those things, whether or not we got more to go, more up to go. It has zero to do with guessing those things or knowing where those things are going or anything else like that. But the most emotionally difficult markets are also usually where the biggest opportunities are in the market. The harder it is on you emotionally and the harder it is to pull that trigger, that's typically the best time or one of the best times to be buying stocks. Basically, the harder it is, the easier the money is to make on the back end. And let's just look at just the last quarter of last year and kind of the beginning of this year for proof of that. I mean, if you bought Tesla in those low 100s instead of selling and everything else, those shares that you bought are basically have doubled up. And if you bought Meta way back when it was in the 80s it has had more than a 100% return on your money so far. And that's not, short term, that's not long term gains. That's not over the course of a year or 2 years or whatever. Those are in large stops. It's not a small cap that just, they move much more volatilely and they're much more easier to double up. These are huge mega cap companies that you've basically gotten a 100% return on or better in a very, just a few months. Heck, if you bought JP Morgan back at those lows, you're up 40% on those buys. Think about that. That is a boring dividend stock, and you're up 40%, which is essentially like a 4 or 5 year gain in that stock. I mean, that's a huge run that you got in just a few months by buying during those times. And that's what I mean by those are the easiest money you'll ever make is during those times whenever the emotional part is so difficult. You got multi-year returns, not single year returns, multi-year returns on those stocks in just a few months. And these aren't super high risk, high reward plays or anything else. These are solid staple stocks and you got huge returns on them in just a few months during a huge bear market. Now, maybe everything does get worse and all those bears are right and everything's going to get worse. Well, that's cool. I have a nice cushion in all these sort of stocks. Great. If it falls down, I can add more, right? But the point is, I made those buys and I have a very, very nice cushion for it to fall if in the event that's what happens. I don't know. It doesn't matter to me. I have a plan for it and I'm ready. And honestly, the answer is very simple, guys. It's so simple, you guys may actually be mad at me, but I'm going to give it to you guys anyways here. But using this exact technique and strategy is exactly how I was buying those lows, which were basically gifts, not the disaster that everybody else was saying all the way around. They were absolute gifts, and that has been proven out over the next few months that we've, basically enjoyed this run up in those stocks. So the first is to put an actual valuation on the stock. And I'll be honest, guys, up front right now, this type of market, there are some stocks that are overvalued still from a valuation standpoint. And of course, there are some stocks that have had huge 100% runs and they're still undervalued. That's why valuation is so important, not just in a hype run up, but also in a down market like we're in right now, because you could still get caught buying a stock that may not return very, very well over the next year or two. But you also may be able to buy a stock right now that's up over 100% and still get a great return, an incredible return over the next year or two with that same stock. So you've got to kind of understand that and realize that you can't know that until you actually do a valuation in the first place. So it's not like just, hey, the market's beat up, just throw money at anything and you'll make a lot of money. That's not true. There's a lot of stocks right now, that are overvalued. My favorite, Apple, right now to me is a little bit overvalued. It just is. I'd love for it not to be. I'd love for that to be different, but it still kind of is right now. So I'm not buying that stock, but there's other stocks that are absolutely undervalued, but you won't know that until you do an actual valuation on those stocks. And second, once you identify those undervalued stocks, set a price target to actually buy that stock where you'd be happy owning that stock with no emotion, no anything else there, just sitting down. I use pen and paper, you can use whatever you want, but sitting down going, hey man, if that stock got to that level, that's a great buy to me. And I already, discount it in my head already, whatever the heck I buy at, no matter how low I put it, it's going to go lower. That's just the reality of when I buy. Trust me, it's an ongoing running joke in my group. And it seems to hold true most of the time. Everybody just waits for me to buy and then everybody piles in a few days afterwards and they get a better deal than me. Whatever, it doesn't matter. The point is you've got to set those price targets and then be willing to execute those buys whenever it hits that. And that kind of leads me into the last step, which is you have to ignore the noise most importantly. When you ignore the noise, I don't need YouTube or the media or anybody else telling me 150 for Tesla's a good deal or 120 or 104 or whatever the heck the number is. I don't need any of those folks to tell me that. And more importantly, what were they telling me as, they may have told me those were great deals, 6 months ago, but as it actually hit those levels, they were just telling me, oh no, don't buy it. It's going lower. It's going down here. It's going down here. I don't need any of that in my decision-making process at all. That's going to have me going whenever I set my price target to basically ignore that price target and wait for it to go lower, which of course, inevitably, it probably will in the short term, which of course, then you think you know what you're doing. And it kind of becomes this self-fulfilling prophecy to where now you're chasing it all the way down. And as it comes all the way back up, it's just got to come back down and so on and so forth. Basically, the noise has dictated what you're doing and has created, or basically taking you off the plan that you just worked so hard on creating a valuation, creating a price target. And now you're not executing to your plan because you're worried about what Tesla's going to do tomorrow, next week, next month, instead of going, do I like this price for Tesla? And how do I think that price is going to look compared to where the stock price should be in 3 to 5 years? I always am looking 3 to 5 years out. And that makes it very, very easy for me to buy Tesla at 180, we'll say, despite the fact it dropped all the way down to 104. So it meant I bought more. It meant it was a better deal. because I think in 5 years, we're all going to wish that we would have bought more at those prices, regardless of whether it's 180, 140, 120, 180, 200, 250, whatever the case is. I think by the time we get there, we're all going to wish we would have bought more during that time frame. And of course, all those people out there making 275 guesses, they're eventually going to be right. And then I'm sure they're going to point to the 270, the one time that they got it right, and ignore the other 274, which honestly, in the end, they're all just trying to time the market, which nobody can do. Ignore the noise, and if a crash comes, remember that is an actual gift, and have your plan ready to take advantage of that gift. It's not a disaster. And if you don't know how to do a valuation, how to set price targets for a stock, and a whole bunch of other things like that, make sure you check out the Market Insiders private group. It's the pinned comment down there, where you can see all my buy and sell alerts in real time, my watch list with price targets. We got 5 free courses that teach you all of those techniques, along with several hundred videos you can check out as well, and a whole Discord group full of several 6- and 7-figure investors to help you out with your investing, create your plan, and all that sort of stuff like that. And click here if you want to see the 3 stocks I'm buying right now, and click here if you want to see my exact plan for the market this year. So thanks for watching, and we'll see you in the next one.